Hi, good afternoon, everyone. I'm Simon from Phillip Futures. Thank you for taking time to join us on this lunch webinar. Okay, today I will be sharing with you a simple strategy, okay, technical using charting, right, to spot the intraday trend, okay, in forex trading. So later on in this session, what I will do is I will give some example of using some indicators on the chart and how can we define the trend for the day for some currency pairs. And then also we will go on to a live chart analysis with the MT5 platform. So all in all, this session should take about 30 to 40 minutes. Okay, because I understand lunchtime may be short for you, for most of us. So I'll try to keep it straight to the point, and hopefully this session will be useful to you. Okay, so for a start, just like to do some disclaimer. So whatever information is shared today, right, is more for education purpose. There's no trading call involved. So yeah, it's more for illustration purpose. Okay, so like I mentioned, this is what we'll be going through today. So the first part is just a very short introduction to the indicators that we'll be using to form the strategy. Okay, and after that, we'll go into the technical analysis part where we'll see some examples of how to define the trend of a currency using moving averages and RSI. So for those of you who are already trading using charting, right, I believe these indicators are very familiar. You should be very familiar with this indicator. And so it should be easy to follow. Also, one thing I'd like to highlight is today is purely based on, we're talking about mostly technical analysis. So I will not be going through the basics of what is Forex trading. If you have any questions on how to start trading in Forex and what is the mechanism of Forex trading, we can arrange for a further session after this. Okay, so today is purely based on technical analysis. Okay, so let's begin. First of all, let's talk about what is a moving average. So if we have been using charting before, we'll know that moving average is a line. It will take the average of the closing price of the candles that we specify. Okay, so if let's say we put a moving average 10, and if we are doing it on daily chart, it means that we're taking 10 days closing price to measure what is the average for these 10 days. Okay, if you are doing an hourly chart on an hourly chart and we are taking 10 candles, it will be showing the average price for the 10 hours, for the past 10 hours. So this is what a moving average is. But what we will be using today, right, is the exponential moving average, or EMA for short. So the main difference for exponential moving average is the formula place a greater weightage on the more recent closing prices. So meaning that it will actually react faster to any changes in price. Okay, this is useful because we are mainly trading in a short-term time frame. Intraday is usually we try to buy and sell within the same day. So we need to have we are looking at a very short-term time frame. So if the moving average can react to price changes faster, it will be better for us. So we'll be using this exponential moving average. Okay, so this is one of the indicators that we'll be using. So how does it look like on the chart? You just look like this on a line, a curve, a line like this, right? So later on, I'll show you what settings we'll be using. The second indicator that we'll be using today is the RSI. So RSI actually stands for Relative Strength Index. So what is this about? It's actually measure how fast price move. Okay, it's an oscillator. It oscillates between 0 to 100. So if let's say the price move in a very short time, very fast, the RSI will react to it. Okay, and if it's coming down very fast, it will go nearer to 0. If it's going up very fast, it will move nearer to 100. Okay, so how does it look like? It will look something like this. Okay, below the chart. you can see that there is a 30 and 70% level. Okay, 50% is the middle, but usually we will look at the 30% and the 70% level. If it goes below 30%, okay, in this case, if it goes below 30%, it's an indication of a short-term oversold signal. That means the price is coming down a bit too fast, a bit irrational. So probably there's a chance of a rebound, right? And if let's say the price is above 70, moving above 70 range, it's an indication that probably prices are moving up a bit too fast. Okay, so there may be a correction coming. Okay, so this is how we can use the RSI. So this is the summary. So according to the creator of the RSI, right, when it's above 70%, it's an overbought signal, and if it's below 30, it's an oversold signal. Okay, so based on these two indicators, we'll be able to form a very simple and straightforward strategy to look at the forex market, right? Okay, so let's dive straight into the trading strategy. How can we use these two indicators to come up with a technique to identify the trend? So first of all, we will need to set 5 sets of exponential moving averages. Okay, and the settings will be as follows. You may want to take your time to take a look at it. 5, 20, 50, 100, and 200 settings, and applied to close. So once we input these 5 moving averages into the chart, it will look something like this. Okay, so you can see 5 lines. So starting with the pink color one, the first one is the moving average 5. The second one, the purple one, is 20, 50, and the blue one is 100, and then the orange one is 200. Okay, so once we input the 5 lines, right, we'll see this setup, and we'll be using a 15 minutes chart. Okay, usually we start with a 15-minute chart for a currency pair. So you will see something like this. And how do we see whether it's an uptrend or a downtrend? So very simple. In this example here, it is an uptrend example. How do I know it's an uptrend? If we see the smaller moving average is above the bigger one, that means 5 is above 20, 20 is above 50, 50 is above 100, and 100 is above 200, right? This indicates that this is the start of an uptrend. So the starting point can be around the initial part of the chart, on the left side of the chart. You can see that it starts to form 5, 20, 50, 100, 200. So the line starts to have a alignment, okay, from smallest to the biggest. So once we see that there's alignment from smallest to the biggest, right, this is an indication that is a possible uptrend starting. Okay, a possible uptrend is starting, and we may want to look to buy, of course. And of course, in between, the lines may start to crisscross. Okay, like for example, if you look at the right side of the chart, you can see that the 5 is coming down, cutting below. But that doesn't mean that the uptrend has stopped or already finished already. It's coming down. Not necessary. So how do we know that the uptrend has already ended? We will need to see the price, the candles, that means the price, starts to drop below the last line, which is the EMA 200. When we see that prices starts to penetrate below EMA 200, right, then that is a possible indication that the uptrend may have ended, and we are either going into consolidation or it's a downtrend coming. Okay, so first thing, we need to identify where is the start of the uptrend. Once we see an alignment, the smaller moving average above the bigger one, okay, 5, 20, 50, 100, 200, that's an indication that there's a possible start of the uptrend. So once the uptrend starts, right, it will remain as an uptrend regardless in between whether the EMA cross each other, only until when the candle, the price, breaks below EMA 200, then it's a sign that the uptrend is possibly ending. Okay, otherwise, as long as it remains above EMA 200, it is still considered an uptrend. Okay, we will see more example of this later on. So just understand this first, that alignment, once we see 5, 20, 50, 100, 200, then it's an indication of the start of an uptrend. Okay, so what's a downtrend? Downtrend is the mirror image. Okay, so in this case, you can see that EMA 5 is below 20, 20 is below 50, 50 below 100, and 100 below 200. So if we see this kind of alignment where the bigger moving average is on top of the other, then this is an indication of a downtrend. Okay, the starting of a downtrend. Same thing, it will remain as a downtrend until prices break above EMA 200. Then it could be a sign that this downtrend is going to end or is consolidating. Okay, so so it's quite simple, quite straightforward. As long as you see that there's alignment, the bigger number average is above the other, okay, and the sequence is there, then this is a start of the uptrend, downtrend, sorry. Okay, so we must see 200 above 100, 100 above 50, 50 above 20, 20 above 5, then this is a downtrend. If the sequence is not aligned, that means if let's say we see 200, the next line that we see after that is 50, then we see 100, and then we see 5, and then we see 20, then that is not a downtrend. Okay, the sequence must follow the number sequence also, from biggest on top to the smallest, right? Then this is a downtrend. Okay, now after looking at this, you may say that actually is quite obvious that this is an uptrend. Okay, you can see it's higher high, higher lows, and this is pretty obvious it's a downtrend. Why do I need the moving average to show me this? Okay, but if let's say we start with an empty chart, that means only the candles without the indicators, right? Like this chart here, for example, are we able to tell what is the trend? Most of the time we will be seeing something like this. Okay, a very obvious uptrend or downtrend is not so often. Okay, probably only 20-30% of the time is a very obvious uptrend, downtrend, but most of the time we are seeing something like this. Okay, so how are we going to trade? But right now, if we add in the moving averages, okay, without the moving average, we can't see anything. So if let's say I add in the moving averages now, so at a glance, right, we can actually get an idea what is this like, what is likely to be the trend for today for this currency pair. Okay, so actually it takes us less than 1 minute. Okay, the title is within a minute, right? But it actually takes us less than a minute to be able to identify whether what trend is it today. So based on this and based on what I've shared, it's likely that today for this pair dollar CAD, it's going to be a downtrend. Okay, of course this is not a live chart. This is not a live chart. Later on we can see the live chart, but based on this example here, you can see that it's more likely to be a downtrend. Okay, why? Because you can see that on the left side of the chart, you can see that the 200 is above 100, 100 above 50, 50 above 20, and then 20 above 5. So this is an indication that this is the start of the downtrend. Okay, in between you can see that the line starts to crisscross each other. Doesn't matter as long as the price, the candle, remains below EMA 200. You can see that at one point it almost break above the 200, but it came back down, so it remains as a downtrend. Okay, another example. So this this one, this is a dollar yen example. Of course, like I said, this is not the live chart. So you can see that without the lines, right, we may not be able to really tell what trend this is. But once we add in the line, it becomes pretty obvious that this is more likely to be an uptrend. Okay, so we can see from the left side of the chart, 5 above 20, 20 above 50, 50 above 100, and 100 above 200. So this indicates the start of the uptrend. Okay, So with this technique, right, we can easily identify any currency pair. What is the intraday trend? What is the possible intraday trend? Okay, and as long as the candle remains above the EMA 200, it will be considered an uptrend. Okay, it will be considered an uptrend. So what we need to do is just to identify the starting of the uptrend and to trade with it until the candle breaks below EMA 200. Okay. Okay, so let's move on. Last one. Same thing. Without the lines, we can't really identify what is the trend. So right now, let's say I add in the lines. Okay, just take a quick look at this. So from here, we can see that we are unable to identify the starting point of an uptrend or downtrend. Okay, because you can see that it's quite there's no sequence. The sequence is mixed up. Okay, and the lines are very close to each other. So what this means that it simply means it's a sideways market. Okay, so we know that market doesn't just move up or down. There are times where market consolidates. So this is once we see that the lines are very tight, very close to each other with no indication of any uptrend or downtrend, right? And the prices keep cutting up and down above the EMA 200. This is an indication that the market is moving sideways right now. Okay, so in a sideways market, the strategy that I'm sharing with you today here, we won't be able to use to trade. If you have other techniques or other ways to trade a sideways market, some people like to use Bollinger Bands. Okay, if you have other techniques to trade a sideways market, you can probably do so after you identify the trend of the currency pair. Okay, so uptrend, downtrend, and sideways. With the moving averages here, right, we'll be able to identify the trend of the currency, intraday trend of the currency. That's one of the reason why I use 5 moving averages line, because if we just use 2 moving average line, right, we may not be able to identify sideways. We could probably identify uptrend or downtrend, but if it's a sideways market, we won't be able to identify. Okay, so using this moving averages is easier at a glance. We can see whether is it uptrend, downtrend, or sideways. Okay, so sideways market. Okay, now after knowing how to identify the trend, we will need to know how to enter a trade. So what do we do? Where do we enter? If let's say I know, okay, it seems like it's an uptrend today, so how do I enter a trade? Based on our analysis, based on our experience, most of the time, the support level, if it's an uptrend, okay, the support level will be on the EMA 100, which is the blue line, or the EMA 200, which is the orange line. Okay, so if it's on an uptrend, these two lines tends to be the support for the currency pair. Okay, so what we need to do is once we identify that, okay, let's say this uptrend, okay, if you take a look at the left side of the chart, you can see that 5 above 20, 20 above 50, 50 above 100, and then 100 above 200 is a start of an uptrend. Okay, you can see that it's beginning to form the pattern. But of course, once we see the pattern, we don't straight away buy. We want to buy at the support level, which is 100 and 200. Okay, so we need to wait. So normally what we can do is, let's say we are working, so we don't have time to keep monitoring the market. What we can do is in the morning or when we have time, we can take a look at the chart. Then we see what is the trend. If we can identify that, oh, this looks like an uptrend, and we want to place a trade. So what we can do is we can place an order probably near the EMA 200 or 100 levels. Then you can leave it. Of course, put some risk management orders as well, like stop loss, in case we can't monitor the market, right? So we can do that with this technique. So for example, in this case, we would like to queue to buy at the EMA 200 level. Okay, so I give you more examples, and this is a downtrend. Okay, so you can see from the left side of the chart, it starts to show the sign of a downtrend. Okay, beginning to open up and show the sign of downtrend. So on a downtrend, what do we want to do? We want to short sell this currency pair. So like I mentioned, if you are selling, the resistance line will be the EMA 100, which is the blue line, or EMA 200, the orange line. Same thing. It's just a mirror image of the uptrend. So in this case, you can see that the resistance is probably near the 100 levels, EMA 100, and then after that it continues to go down. So we'll look to sell near the 100 level. Okay, usually the resistance will be between 100 and 200, or the support is between 100 and 200, this range. Okay, so now the next question is, how can I be more accurate? Because 100 and 200, if you look at the price range, can be quite a lot of difference. Okay, like in this case, it's at least about 20 pips difference. 20 pips, if you are doing a standard contract, is about $200 difference already. So maybe quite a lot sometimes. Is there any way that we can be more accurate in identifying whether should I trade when it's near the 100 or the 200? If we remember at the start, right, we have another indicator that we have not touched on, which is the RSI. This is where the RSI comes in. Okay, so right now I'll add in the RSI. So the RSI will help us to determine whether the EMA 100 or EMA 200 is the place that we should start our trade. Okay, so if you look at this example here, when the RSI hits the blue line, you can see that it's above 70. Okay, it starts to move over 70. The RSI starts to move over 70. So this is a signal that at this point, this resistance, prices are already overbought. Okay, so there's a chance that it may start to come down. It's already overbought. Moving up too fast. Okay, so there may be a chance that it's coming down. Okay, so this is one example. So what I will do is, once I take a look at the chart and I saw the RSI above 70 hitting the 100 line and it's above 70, then I will try to short. Okay, I'll try to take a short position. Okay, some more example. Okay, this example is more for the uptrend. So you can see that prices starts to come down, and if we take a look at this case, the first time that it touches the 100, right, 100 line, right, the blue line, RSI is still above 30. Okay, RSI is still above 30. So this is an indication that the prices are not oversold yet. Okay, prices not oversold yet. So we will have to wait until it touches the EMA 200, okay, or near to the EMA 200, and then we see that, oh, prices starts to be below 30. Okay, if you look at the middle of the chart, in the middle of the chart, okay, prices goes below 30 and it's near the EMA 200. Okay, so this is a trade that we can try to take. Okay, this is a higher probability trade that we can try to take. So we look to buy near this EMA 200. Okay, right, comes down near to the EMA 200 and then RSI is below 30. So I'll look to buy around here. Okay, let's see whether we have some more examples. Okay, so same thing right now here. This is also, at a glance, we can identify that it's likely an uptrend. So we are looking to buy near the 100 or 200 line. Okay, so you can see that there are a few opportunities in this case. At the beginning, right, you can see that there's a opportunity also. You can see there's a slight breakthrough on the EMA 200, but luckily it went back up. Okay. And in the middle of the chart also, you can see that it touches the blue line and then RSI went below 30. And at the right hand side of the chart, you can see there's also another opportunity to buy. And then it touches the EMA 200 and RSI was below 30. Okay, so this is the opportunity. These are the opportunity that we can take. And okay, just one more thing to share. What is good about this technique, right, is we can also identify that very quickly when a trade is actually wrong already. Okay, so instead of waiting it, put a stop loss far away and waiting for it to hit before I think that, oh, this is a wrong trade, we can actually manage the trade on the go. That means if we see that, once we see that, for example, this case, once we see that the candle starts to break below the EMA 200 and it remains below the next few candles, at least the next 3 to 4 candles, if it continues to remain below the EMA 200 after we take the trade, then it's a indication that this is probably a wrong trade, because either the trend is going to change or it's just going to be sideways already. So what we can do is we can actually try to close the position near to our entry price. Usually when it breaks below the EMA 200, unless there's a news release or any something happen, right? Most of the time we have the chance to get out quite near to our break-even point. Okay, of course, maybe we have to take some loss, but we don't have to wait for it to hit our stop loss to decide that this is the wrong trade. Okay, once we see that there are signs that the trade is not moving in our favor already, we can actually quickly get out to save the losses to protect our capital. Okay, so this is one thing I like about this technique. Okay, it can tell us actually whether the trade is the probability still there. Once it breaks below the EMA 200, right, actually the probability is dropping already. And if you see the next few candles that is still below, then I'll rather get out of the trade first. Okay, I'll rather get out of the trade and then stay sideline first and take a look later. Okay, so just oh, okay, this is just the RSI setting. Okay, RSI we will set 14. Okay, by default usually it's 14 applied to close. Okay, so quick summary of the strategy that I've shared just now. So we define the trend for the period that we're trading by using the moving average. So 5 moving averages, 5, 20, 50, 100, 200. Okay, so these are the settings for the moving averages. So using that, we can check whether is it uptrend, downtrend, or sideways. So once we identify the trend, we wait for prices to move near the support or resistance line. So if it's an uptrend, we wait for it to come down to the 100 or 200 line, and then we check the RSI, whether is there any oversold signal. In the uptrend, we are looking to buy. So once it come down to the support level and the RSI is oversold, right, it's an indication that this is a good probability trade. We can try to buy. All right. And if it's a downtrend, same thing. We wait for prices to come back up to the resistance level, 100 or 200. Check the RSI. Is it overbought? If yes, there's overbought signal, then go for the trade. Okay. Yeah. So this is the summary of the strategy. And next, okay, probably we can take a look at the live MP5 chart right now. Okay, I hope everybody can see my screen. Okay, this is the MT5 MetaTrader 5 platform. Okay, it's a award-winning platform for forex trading, and so you can see that I have a few examples. So let's take a look at this. This is the euro currency. Okay, so this is what I meant just now. From this chart, right, actually we see that it's supposed to be more downtrend. Okay, and there are a few opportunity for the downtrend, but right now you can see that prices starts to move up above the EMA 200 already. Okay, so for example, if let's say I take a short position, okay, let me just do the cross here. Okay, I don't know whether can you see the crosshair. Okay, so example here. Okay, it's a downtrend, prices coming up, to the resistance line. RSI seems like above 70, okay, near to 70. If let's say we take a short position here at this is a Euro USD 1.1780, let's say, okay, and then we see that prices starts to move up and break above and staying above the EMA 200. Okay, actually this is a sign that is no good already. Okay, we should look for opportunity to cut our position. So if you can see that it doesn't move up straight very fast. Okay, we have chance to close our position. And right here, if around here, if we close right, we probably lose around 10 or less than 10 pips. Okay. So instead of normally we put a stop loss of about 30 to 50 pips, right? We are only cutting loss at near to between 5 to 10 pips or less. Okay. So this is what is good about this strategy. So we can identify that the probability of this trade has reduced. Okay, we want to cut loss. So this is what I meant when I talk about identifying that the probability has reduced and we get out faster. Okay, so for Euro USD, you can see that right now it looks likely maybe consolidating because there's no very strong trend, or it could be turning up. Okay, so we probably what we will do for this pair is usually we will wait and see how it goes, whether is it forming a uptrend. If it's forming an uptrend, then we wait for it to come back down to the 100 or 200 line. Okay, because right now if you see the lines, right, they're still very close to each other. We prefer to have it more spread out, okay, bigger gap between each other, then the trend is clearer. Okay, so for Euro USD, we'll probably need to wait out a while. Okay, let's take a look at another one, pound. Okay, this is the pound versus the USD, and we can see that it's a very strong uptrend. I wouldn't say very strong, okay, at least it's a very obvious uptrend. And one opportunity spotted here, okay, you can see here this part, okay, uptrend, come back down between 100 200 line, RSI below 30. By the way, this is a live chart, okay, RSI below 30, buy. So coming back up, okay, coming back up. Yeah, this is one of the setup. So this is one opportunity today for pound USD. All right. And let's take a look at maybe dollar yen. These are the more popular currency. Same thing, you can see dollar yen a bit similar to the euro pattern here, this part here. Okay, a bit similar. It was a downtrend. Okay, come back up, hit the resistance above 70, sell, come down. But the next one, when it goes up, right, it already broke above the EMA 200 and stays above. Okay, so this is the indication that the downtrend may be ending, and it's either consolidating or turning into uptrend. In this case, it looks like it's turning into an uptrend. Okay, why? Because you can see that the lines are pretty obviously spread out already. Okay, and here you can see opportunity also to buy. Hit the EMA 100 near in between 100 and 200, and RSI was below 30 just now. Okay, so one opportunity here for dollar yen. Okay, maybe last one we just take a look at dollar sing. Dollar sing is right now the current market. It seems like it's coming down. Okay, but we have no confirmation yet because the EMA lines are not 100% in sequence yet. So we probably need to wait for another 30 minutes or an hour. We see whether this blue line comes down and becomes the sequence 5, 20, 50, 100, 200. If we see that, then it's likely that dollar sing is also becoming a downtrend here. Okay, and we will try to find opportunity to sell on the retracement. Okay, so yes, that's the sharing on this technical analysis for me. I'm not sure whether is there any questions so far. If anyone has any question, probably you can also type on the chat. Okay. Okay, so if let's say you're interested to open an account, okay, you can look for Terry, your reminder. He'll be able to assist you on the forex trading. And if you need to know more about the MT5, the platform, what are the other features, and what are the products in MT5, you can also check with us. Okay, check back with us, and we will help you to understand more about the products and platform that we offer. So I don't see any questions. If there's no questions, then this will be the end of my session. Okay, so yeah, so feel free to contact us if you have any questions. Contact Terry if you have any question. Then we will try our best to answer and help you. Okay, thank you everyone for your attention. That's all from me today, and hope you have a great day ahead. Right, thank you and goodbye.